JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 19th of April 2021. So yep, welcome everyone guys. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is a Nikkei 225, and yep, we are still kind of flat, I would say. So we're still trading above this upside support line taken from the low of the 22nd of December. So that's a good kind of sign still for the bulls. However, for the bears, yes, we need that break. We need that break of this upside line. We need to see a drop below that 29,519 territory, but so far we're not really getting that. So the 21-day EMA together with this upside line are doing the trick and still providing a good hold up. In order to, like I said, in order to get a little bit more maybe excited with the upside as well, just because we are, let's say, trading below this downside line taken from the high of the 16th of February, and in order to get a kind of, let's say, a little bit more excited with the upside, then yes, of course, a break of this downside line would be needed. So, long story short, basically, in other words, we are kind of stuck here in between these two lines, so we need to see a clear breakout through one of those before, let's say, considering the next short-term directional move, guys. Shanghai Composite, and looking at this picture, this is a little bit more clear picture here, and yep, the Shanghai Composite is pushing higher, or at least trying to push higher. However, as I've mentioned to you before, I would prefer to see a break above this little area right here, and that's roughly around the 3,495, 96 zone, approximately around there, marked by the current highest point of April, and so this level here, and that's the current highest point of April. We need to see a clear break above it in order to go for the upside, but at the moment we're very careful, just because again, it could push higher. It is currently above all of the EMA, so that's a positive sign, but will the bulls have enough steam to drag this one above this area, above this hurdle, above this barrier? Well, let's wait and see, guys. But for now, I'm leaning a little bit more towards the upside here. Let's say I'm cautiously bullish, but I need that break here above this 3,496 territory. For the downside, well, I would prefer maybe to see a drop somewhere below this 3,373 territory, marked by the current lowest point of April. And then, yes, let's say, depending on how all this is going to be trading, of course, maybe, just maybe, we could have the 200-day EMA approaching this level here, and basically a break of this level would, let's say, we could also place the price below the 200-day EMA. But of course, let's not get ahead of ourselves. First, let's see what's going to happen here with this barrier, the 3,496 zone. S&P 500. So looking at this, yes, we had a new all-time high last week. It's actually every day we had a new all-time high last week, so yep, it was a good run. If we take a look at the weekly candle here, weekly chart here, you can see that Yes, we continue to push higher here, and to be honest, it seems that there's no stopping for this index. But of course, we're not rushing into anything yet. First, we continue to target the upside slowly, carefully, with a tight stop loss, because just in case if this suddenly starts reversing here, and if we see, let's say, a drop somewhere below this area, the 4,151 zone, or even better, a drop below the low of the 14th of April here near the 4,121. Now this is where it could become a little bit more exciting for a few more sellers, guys, and then yes, lower levels could be met. But for now, be very careful with the downside, because again, we are kind of, let's say, we keep on creating these new all-time highs every kind of almost every day. So keep that in mind. I mean, this could continue rallying, but if we suddenly see the reversal signal, then maybe, just maybe, we could go for that little extra correction to the downside, guys. Because the reason why I'm saying correction, because don't forget that we're still trading above some of these upside lines, and one of which is this one right here, the upside support line taken from the low, the 10th of November. The other one, another tentative upside line, is right here. You could keep an eye on that one first, of course. This one's taken from the low of the 30th of October, and then yep, we could take it from there. So now then, jumping into the DAX, the German index, and look at this explosion here on Friday. I mean, it overcame the previous all-time high near the 15,312 territory, and ended up testing the area around the 15,474 mark. So that's the current all-time high. If we take a look at the cash index as well right now, so let me just quickly pick up on that. We'll see that yes, the price is currently slightly below this hurdle, below the all-time high. Although after the cash index did drift higher, we did kind of hit that 15,500 level, and yep, now we're seeing a bit of a corrective move here lower. Now, I would say like this, that if we continue to see the index trading below this 15,474 territory, there is a chance we might see maybe a bit of a corrective move here lower. However, if it climbs above it, then yes, of course, higher levels could be met here. We could be placed into the uncharted territory, and yep, then it's kind of then again, it's the sky's the limit for this index. But so that's why, guys, if you are looking for the downside, if you're looking for some shorts here, probably be very careful. And like I said, currently, yes, the cash index is trading just fractionally below this area, this 15,474. If it continues to do that, yes, we'll aim maybe for a bit of a corrective move here lower. However, if it struggles, then, well, I mean, it's the higher levels here. Gold is now approaching, or should I say, has already approached this downside line taken from the high of the 7th of August of last year. So although I've previously mentioned that this downside line was a bit of a tentative one, however, that was my main target at the moment. I mean, back then, last week, and you can see exactly why. So we had a push higher, we moved above that 1760 territory, and we've ended up testing this downside line. We came just very shy from hitting the 100-day EMA together with the 200-day EMA, but currently, yes, we're getting a hold up here. Now, in order to be a little bit more on the safe side, guys, so what I would like to see here is, first of all, a break of this downside line, and then a push above these two EMAs here. Now, I do understand that maybe this could be a bit of a decent area maybe to miss out here if you like to scalp, but to be honest, I would rather be safe than sorry here, guys. But yes, if we do get this break of this downside line, we could start looking at the upside. However, keep your eyes on these two EMAs. If one of these provide resistance, then a bit of a decline could be possible. However, if these get cleared, well, I mean, we could start aiming for even higher areas. For the downside, what I would need to see here, well, I mean, for that, I would need to see maybe a drop back below the 1760 territory, or at least maybe, or even better, drop below the 1745 zone here, which previously acted as a good area of resistance. Now it could take the role of support, but if that gets cleared, we could also see the price falling below the 21-day EMA. Shown here is the yellow line, and then maybe more sellers could join in here, at least in the short run. DXY dollar index, so slowly drifting lower. I mean, everything seems to be kind of working according to the plan. So last week I said that if we get a drop below the 92 territory, then yes, my next target is the 91.36 zone, which, as you can see, acted as a very nice area of support recently. Yeah, we'll take it from there. Don't get me wrong, we might see a break here, breakout through this barrier. However, if the daily candle still remains above this area, then, well, this breakout could be just as a temporary little kind of, the false breakout here could be seen as a false breakout. And maybe we could see a nice rebound here back to the upside. So for now, I'm going to stick to the downside as long as it remains below the 100-day EMA here, because that's another kind of bearish indication for the dollar. But yeah, guys, I mean, for now, be very careful. Yes, I'm aiming for this 91.36 territory, and then we'll take it from there. I'll pick up on this one later on today during my traders' tea time. Bitcoin. So nice little correction here during the weekend, and look at this move. So first of all, let's start from the beginning. So we managed to break this upside line taken from the low the 27th of January. So that's kind of a bit of a bearish indication here in the near term, for the near term. However, we're still trading above some of these other upside lines, and one of which is this this one taken from the low of the 11th of December. So in a way, even if it drifts again to the downside, this could still be seen as this could still be classed as a temporary correction before another possible leg of buying. So that's why I keep this in mind, guys. But for now, we go from what we have here, and I would say that let me just quickly for the very near term, and let's say even for today, maybe something like this could be possible. We could see maybe a bit of a larger corrective move here higher if the 21-day EMA provides good resistance. Yep, another slide could be possible towards this upside line taken from the low of that 11th of December, and then we would take it from there, because if it rebounds, well, yep, more bulls could start joining in here and pushing this one higher. However, let's say if this decides to push straight away to the upside and climbs back above this this upside line taken from the low of the 27th of January, we could, yes, we could start looking at higher levels straight away. We could start aiming for that all-time high again near the 64,829, and then we would take it from there, because if that gets cleared, of course, this places the crypto into the kind of uncharted territory here, and yep, well, the sky's the limit. So, but for now, like I said, long story short, the idea here, for the short-term idea, I need to specify this, that we could see a bit of maybe another decline here, especially if the rate here continues to trade below this 21-day EMA. Now jumping into Ripple, and yeah, here very nice, beautiful decline here. So this level here worked out perfectly, and just let me remind you about this one. Basically, I was talking about this previously last week, and you can see that the 1.9657 territory did provide good resistance. We got a hold up here. And yep, the crypto drifted back down. So again, for now, this move could still be seen as a temporary correction. However, I would prefer to maybe at least see a push in the daily candle staying above the 1.57 territory in order to, let's say, get a little bit more excited with the upside. So yep, for now, guys, long story short, yes, we could still aim for the upside. However, at the moment, we need that push back above the 1.57 territory. For the downside, now this is where it could be interesting. I would like to see this drop below this key support zone, which did provide a good hold up here between this level. This area is between the 1.0960 and 1.1177 levels. So yep, a nice good drop below it may open the door towards let's say a bit of a larger correction here to the downside, guys. So keep that in mind. AUD USD. So looking at this picture, everything seems to be still on the positive side here for AUD USD. However, I need that break here. So the 0.7756 territory did provide good resistance. So this was my first little target after I said that if we get a pop above the 0.7664, yes, my next target is the 0.7756 or the 0.7849 territory. So we could still aim for that if we get a nice pop above the 0.7756 zone right here, and then yes, we could take it from there. So for now, I'm still leaning in a little bit more towards the upside, especially if we get a pop above the 0.7756 territory. NZD CHF very quickly on this. So again, we had a good hold up near this downside line. So I've mentioned this pair last week to you guys, and you can see the reason why I've mentioned this downside line as well, as it did provide a good hold up once again. So we could see maybe a push higher again, but because we're currently seeing a hold up near this 21-day EMA, but if this downside line provides resistance one more time, yep, another slide here could be possible. So keep that in mind. If you're not really comfortable with, let's say, with this little idea here to be a little bit more on the safe side, you could keep an eye on the current low of today near the 0.6552 zone. And then, yes, a break below this, yep, could open the door back towards this 0.6474 mark, which is currently the lowest point of April. For the upside, pretty straightforward. Push a break of this downside line and a push above the 0.6645 level could do the trick for more buyers. USD CAD very quickly on this. So this is still annoying. This is still very annoying. I mean, because I said that to be honest, USD CAD and Euro GBP, which I'll mention next one, are the most annoying pairs for me, to be honest, because they don't really sometimes follow all the technical rules. They tend to kind of move a bit chaotically, and yeah, for now, I mean, looking at this picture, we can see that the rate is oscillating around this 21-day EMA here, shown as the yellow line, so just moving kind of sideways with a slight tilt to the downside, and that's why probably I will get rid of this range here. Now, previously I looked at this as a range, a little short-term range, but to be honest now, I would probably get rid of it, and or actually maybe I might reuse these highlighted areas. Let me just always reuse, guys, always, yep, just a good habit to do. Yeah, for now, I mean, looking at this picture, I will say that it might continue, let's say, drifting, let's say, lower here, slow with this kind of moving lower with a slight incline, of course, declines with a slight decline. Again, I would say that, well, we need to see maybe a clear drop below some of the levels here. Now, for the upside, that's pretty straightforward. We need to see a push above this 1.2634 to 35 territory, roughly around here, in order to go for the upside. But for the downside, maybe a drop below this little area, maybe this 1.2505, or even let's round it up here, maybe that's 1.25 zone. If we see the daily candle staying below the 1.25 territory, then this kind of could increase the chances for a bit of a decline here. However, I will be very careful still, guys, because again, it's a very difficult one. And for now, let's do it this way. If we see the daily candle dropping below and staying below the 1.25 territory, yes, we'll go for lower areas, but we'll have a very tight stop loss just in case, like I said. But if this pair starts popping above the 1.2634, 35 territory right here, then yes, maybe we could consider a bit of a move higher. Euro GBP. Euro GBP, still I'm sticking to the same idea here that I mentioned before. This 0.8628 zone seems to be kind of still doing the trick, so still providing a good hold up. Together with the 21-day EMA, of course, here, and I would say that if it continues to hold, yep, we might see something like this happening here, where we could see a nice reversal here and a push back to this 0.8731, 39 territory, approximately around here, which also is not far from that 100-day EMA. For the downside, what I would need here is to see at least a drop below the 0.86 territory here, and then yes, we could consider maybe a move lower. But at the moment, it's I class this as a temporary correction before another possible move higher. And finally, EURUSD. So we're stuck near this 1.1990 level. Just fell shy of a few points from hitting the 1.20 territory, as you can see here last week. But nevertheless, still positive developments happening here, and in order to go for the upside, well, I would still prefer to wait for this pop above the 1.1990 or even that 1.20 zone, and then yes, we could go for this further correction here to the upside, because still all this move here since around the end of March, the beginning of April, is classed as a temporary correction, because we are still trading below this downside line taken from the high of the 6th of January. Now, something that I've mentioned to you guys as well previously, last week to be more precise, but another thing, that this highlighted area might be considered as a possible neckline here for of a potential head and shoulders pattern. So let's say if we see the rate, for example, declining heavily and drifting back down here, falling below the 21-day EMA, but let's say stalling somewhere near the 200-day EMA, and the bulls start picking up somewhere around here and pushing this pair back up here, back towards this highlighted territory, then certainly this could look as a nice potential little inverted head and shoulders pattern. Again, like I said, I might be getting ahead of myself here a little bit, but this is something for you to keep in mind, just in case. Let's say if we start selling off here sharply, and you start drifting below the 21-day EMA, so yep, the bears should still be very careful near the 200-day EMA. So that's why my preferred scenario for the downside is from this 200-day EMA near the 1.1834 territory, and yep, a nice good drop below this, yep, could open the door towards lower areas. So guys, that's it for this session. So I hope you found it useful. Thank you very much for joining in and watching this one till the end. I really appreciate your time, guys. So if you want to catch my video later on, my traders tea time is always 12:30 GMT time. But for now, guys, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.